Hey, what's up YouTube? Houston here. For those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me and supporting me, salute. And for my favorite patrons, always double salute. Now, today's video, we're actually going to be talking about the new FICO score and its benefits. Yes, there's a new FICO score. Now, here's the thing about this. Many people are under the impression that when they go to Credit Karma, that they're getting their FICO score. That's not your FICO score. That's your Vantage score. When you go to American Express and they give you your TransUnion Vantage 3 score, that's not your FICO score. Okay? When you go to Capital One and you're looking for your FICO score, they're not giving you your FICO score. They're giving you your Vantage score. Okay, so a lot of these financial institutions that you think are giving you your actual FICO score, they're giving you a Vantage score, which is totally different. Okay, and we're going to actually dive into it so you can understand and how to actually take advantage of your real FICO score. Okay, now here's the thing about it. FICO score just released Ultrafico score. There's also a new FICO 10 FICO score. So we're going to talk about that in a separate video, but you need to understand why this is so important, and especially if you're an individual that has bad credit or no credit. Now, given the breakdown, I did the FICO score and the Ultra score. So I want you all to understand this in terms of how to actually leverage this to be able to position yourself to get access to more credit and more funding. Okay, now with the FICO scores, understand that 90% of most lenders, whether it's in the car industry, credit cards, personal loan, mortgage industry, these lenders, or student loan industry, these lenders, they usually use your FICO score. Now, in reference to your FICO score, they may use your FICO score 2, 3, 5, which is your mortgage scores, or they may use your FICO score 8, which your major bank cards, which are like your Bank of America, your Chase, your American Express, your US Bank. Those use your FICO 8 scores, okay, bank card scores. Wells Fargo is a FICO 9. Navy Federal is a FICO 9, which we're going to talk about that, and the reason why I love using FICO 9 and how you should use it to your best benefit, okay? So understanding what's different. Now, the FICO 10, again, we're going to talk about that more in terms of understanding real time, all right? So we're definitely going to get into that, but you need to understand the breakdown. Now, with the FICO score, the traditional FICO score, it's about the payment history, which is 35%, the amount owed, which is 30% of your FICO, calculated a percentage of your FICO score, excuse me. Length of your credit history is 15%. Now, here's the thing about it. Let me help you all understand about length of credit history, and I'm going to give you some insight. The reason that I'm always telling you, if you're paying rent and you're paying with cash or money order, stop doing that. And I'm going to elaborate more on that. Just give me a few minutes, okay? But I just want to get through this. Now, the credit mix. The credit mix also, what? 10%. Then you have new credit, which is 10%. So, like, many people don't understand, like, when they apply for a new credit card, their credit score goes down. It goes down for drop for maybe about 60 to 90 days, then it'll go back up, okay? Depending on how old the credit file is, all right? So that's something that's very important. Also, there's something that's very important. I want you all to look at this credit mix. Your credit mix or your credit cards, your retail accounts, your installment loans, finance, mortgages, and stuff like that. And I'm going to make a separate video because I know a lot of people are like, well, how many actual credit cards do I need in order to get an 800 credit score? So I've got a video coming that's going to explain that, because I think if you understand that whole process, then you'll be like, oh, okay, I'm on the right track, or okay, I need to do more of this or that. That being said, understanding about the credit mix. This is the reason why I tell people, if you have open revolving accounts, okay, and then you have a car loan, or you may have a personal loan or an installment loan, and you pay off that car loan, personal loan, installment loan. If you pay that off, you can possibly see a drop in your score up to 40 points. Is because it's in that credit card mix. So if you have a bunch of revolving and you don't have an installment loan, a personal loan, a car loan, or something like that, then again, that's costing you up to 40 points. All right, so that's the reason why that's so important. All right, now that's explaining some of the basics of the FICO score. The Ultra score, many of you have heard of Experian Boost, okay? And we're going to talk about that. Now, with Experian Boost versus Ultrafico score, we're going to talk about it. But let's look at Ultrafico score versus the FICO score itself. Now, this is a new scoring system that FICO score came up with. So, if you don't have credit, or if you have bad credit and you've been denied, so then lenders can actually say, okay, well, what's your Ultrafico score? So the benefits of this is you have a lower credit score or no credit score at all, okay? And I'm going to talk about some of the lenders out there that even if you don't have a credit score, they'll give you funding. Or if you have a low credit score, they're flexible enough to work with you, okay? So those are different data points. But I wanted to explain this. Now, with the Ultrafico score, it's using banking information. This is the main reason I tell you guys that a lot of lenders, they're going to stop focusing on a credit score, and they're going to start focusing on an internal score. That means that, and I'm going to break it down, but like your personal accounts, savings accounts, CDs, how many accounts you have with them, how long you been with them. And this is what Ultrafico score is all about. It's the length of time your bank accounts have been open, recent frequent bank account transaction, how often you use your bank accounts, existing cash on hand in the bank account, history of bank account positive, meaning that how often do you go with overdraft fees, negative fees and stuff. And granted, like with Chase, Bank of America, they're starting to eliminate the overdraft fees, stop charging you overdraft fees and stuff like that. At the same time, having those multiple overdraft fees and stuff can become a negative impact, especially now it's going to be included in the Ultrafico score. Now, if you have an established credit score already, the Ultrafico score is not going to affect you. But you do need to know the difference between your real FICO scores. And if you want that, click the link in the description and get your real FICO score so you can know, okay, this lender is dealing with this credit card here, this lender is doing this here, so you can know the difference in the scoring system. And if you want a thorough breakdown and some tutorial on it, schedule a 30-minute consultation with me by clicking the link in the description so I can help you go over your FICO score so you can understand how to leverage your FICO scores in order to get more credit and more funding. Okay, back to the Ultrafico score. Ultrafico score is generated only if you opt in. Just like with Experian Boost, you have to voluntarily opt in. All right. And now looking at the breakdown, to get your Ultrafico score, you have to first apply for credit. If a bank or lender denies your loan or credit application, you can request that the lender use your Ultrafico score instead of your Ultrafico score instead of your FICO score. So what that means, you go to the bank, you apply for a credit card, and they say, well, you don't qualify, right? But then, because you signed up for Ultrafico, they can see that you have good deposits and stuff. You have regular deposits. You've been with your bank for a long time. You always paid your other bills through your banking account and stuff like that. They would use that system instead of your they may consider using, let me clarify that, they may consider using that system to actually help you qualify for that loan or that credit card, okay? So that's the reason why this is going to be such a big impact, especially for a lot of people that are young, that are trying to build up their credit. They don't have enough credit, or they started building their credit and they made a few mistakes, missed payments and stuff like that, and it's harder for them to get credit. So this Ultrafico score is definitely going to possibly be an enhancer in terms of helping people. I want to go into this understanding about the FICO 8 and the FICO 9 scores. This is so important because the majority of your banks, like I said, U.S. Bank, Bank of America, PNC Bank, Truist Bank, you have, who else? Bank of America, Chase Bank. A lot of your major banks, okay, Barclays Bank, Capital One Bank, they pull your FICO 8, American Express Bank. They pull your FICO 8, okay? So in terms of your FICO 8, bank cards and stuff like that, that means that if you try to, you can't, even if you have an authorized user, they don't calculate that. Now, the thing about your FICO 8 score, if you have a bill, a paid off collections, it doesn't count against you, okay? That's a good thing. If you have a collections under $100, that doesn't account against you, right? So those are some of the perks of a FICO 8. But that being said, your FICO 9 is what you want to focus on, right? Because your FICO 9 gives you more leverage, all right? So, like medical bills, we all are aware, and I made a video talking about medical bills. If you have medical bills that are over $500, those medical bills won't be on your credit score anymore. The $500 ones may not be calculated into your credit score. So there's going to be a difference there, okay? Now, that doesn't say that all medical bills won't be on your credit score. It's just $500 or more won't show up on your FICO score, okay? Now, here's another thing that you need to understand. Like, with the FICO 9, I'm going to break down some of the things that you can actually do to actually build the FICO 9 up much faster and leverage it, and then move over to the FICO 8 because it's so important. So that means by adding authorized users and accounts as well, okay? Now, utility bills as well. Now, that's some of the most important things. Focus on the FICO 9. Okay, don't worry if you have lower credit scores, like you're 580, 600, you're in the 500s, lower 600s, then you want to work on your FICO 9 and leverage your FICO 9 scores, okay? That being said, you can boost up your credit score, your FICO scores, okay? From 25 up to 100 points. Again, using your utility bills, using your subscriptions. If you have gym membership, you may have car insurance. You can use those type of bills to add onto your credit file, okay? And you can do that through Grow Credit or Perch.com. Also, credit builder loans, pledge loans, which we're going to talk about, the pledge loans with Navy Federal, Experian Boost. Now, here's the thing about Experian Boost. When you give Experian permission to get access to your banking information and stuff, Experian Boost only will help your Experian file, Okay, it won't help your Equifax and TransUnion file. But that being said, it is something that you still should consider adding to your credit file. Now, removing inquiries, removing hard inquiries, definitely is going to boost up your credit score. Okay, and I've made plenty of videos explaining about removing inquiries and stuff, calling the fraud department, letting them know, because a lot of people with low credit scores, they try to get a car loan or they're trying to get a mortgage and they just keep pulling their credit file. So because all of those inquiries are all in the same time and you did not agree to do business with those people, you can have those inquiries removed. So again, you have to call the fraud department and you may have to send a letter into the fraud department of the credit bureaus in order to do that. Adding authorized users. Now, here's the thing about it. We just went over the payment history and the credit length. The payment history and the utilization are your biggest part. 30 and 35, right? And the credit length, right? But here's the thing about it. Some people make the mistake and they get approved for a $10,000 credit card brand new. Then they may add their spouse or a relative. That's not helping their credit. Stop that, because you're actually hurting their credit because it's a new account and it doesn't have enough history on it. Enough history, I mean at least 2 years of on-time payments. Okay, so that's the reason that you don't want to add brand new cards on as an authorized user, because it's not going to help your credit. Okay, so just keep that in mind. There are certain cards, again, that you can add on to the credit file. If you have questions about which cards are best to add on as authorized users, schedule a one-on-one consultation. I'll take a look at your file and I can suggest some cards that may help you. Okay, that being said, if you use your debit card a lot, so you can sign up for the extra debit card app on your phone. If your bank doesn't work with them, you have One Financial. You can sign up with them, and your debit card transactions can be added as a trade line. And these are things to help you build up your FICO 9 scores so you can get access to more funding. Now, you also can add rent payments. That's what I was coming back to, because this is so important. There's a lot of people out here that are roommating with people, or they're roommating with people, or they're paying rent to their landlord with cash. You need to stop doing that. The reason is, if you plug yourself into a system that will take the money from your bank account and send out a check on your behalf, then it's an actual rent transaction. Then that can be reported as a trade line on your rent. Like you have like Boom Pay, Rental Karma. Those are some examples. I have other examples of places to pay your rent. I always tell you, if you have a prepaid card, secured card, or something like that, and you have challenging credit, then you want to put the money on the credit card, sign up for Plastic, PLASTIQ.com, sign up for plastic.com, and then make those transactions. Let Plastic send a check over to whoever you're paying the rent to, whether it's your parent or something like that. Then that can actually be a trade line on the credit file. So that way that you can qualify for a mortgage as well as helping you build up your personal credit, okay? So that's the reason that you want to use these. Now, talking about continuing to build up your credit scores. Now, there's SABLE 1, okay? It's a secured card, but turns into an unsecured card after 4 months. Okay, and there's no credit check. You don't have to have a social, but it will help build up your credit file because it reports to the credit bureaus. Okay, there's no annual fees. The maximum amount you can put on is $10,000. Now, like I said, say that you have a couple $1,000 and you're trying to build up your credit. You put it on a card like this. I'll put a link in the description so you can check it out for yourself. But making on-time payments for 4 months, it turns into a regular unsecured card, okay? So by making those good on-time payments. So that's one way to actually help you not only build up your FICO 8 scores, but your FICO 9 scores as well. Also, you have PETAL 1 and PETAL 2. So if you don't have a credit score, if you're rebuilding your credit score, the PETAL 1 card is probably your best bet because it's $300 to $5,000. If you have established credit, it's from $300 to $10,000. Okay, no annual fees. Reports to all 3 credit bureaus, and it pulls soft pull your FICO 9 Experian. Okay, so it's a soft pull on your credit file, but it's definitely a card that you should consider if you're establishing your FICO score, trying to build up your FICO score so you can get access to more funding. Okay, now they mainly focus on like your job history, how long you've been at your address, your debt to income ratio. So with many banks, if you're over 55% debt to income ratio, they'll turn you down. But with the fintech companies like this, you can be over 55% and you still can get approved. All right. So that's one. Upstart. Upstart, they don't focus on the credit score. They will do a soft pull on your FICO 9 score, but if you don't have a credit score, it's okay with them. They'll still work with you. And they are very good company. Although their interest rates may be higher than the banks, they definitely will help put you in a position if you're needing capital, especially if you're trying to raise your credit score or build up your FICO score, okay? Now, they have loans that go from $1,000 up to $50,000, and they're in all 50 states. So, like, places like New York and Connecticut that always have a problem with trying to find lenders and stuff, Upstart is a very good place. One of the good things I like about Upstart is because before you actually take a loan, they actually show you how much you approved for. Okay, now their debt to income ratio is higher than the banks, so they go above the 55%. So their debt to income ratio, you can have possibly about 70 to 75% debt to income ratio. The average annual income is $12,000. $12,000 annually, but you do have to have a valid email, phone number, and bank account. Now, again, they focus on employment history, or if you're in college, you're getting ready to graduate from college and you got a job lined up, they work with that. So if you're doing Uber, DoorDash, if you're doing Instacart, those type of side hustles and stuff, they work with people with side hustles. So they definitely work with people to help them get some funding and also helping you to build your credit as you make your payments back on time, okay? Now, let's talk about Navy Federal. Navy Federal, because a lot of people like being a part of Navy Federal, because Navy Federal, even if you have a 550 credit score, you still can get a $10,000 credit card with them. And let me tell you a story about one of my clients, and he did exactly what I told him to do. He joined Navy Federal. He was in the 550s. He joined Navy Federal. He opened up a personal checking account, the flagship checking account I always recommend. He had a savings account. Then he decided to get a money market account. All right, now, let me help you understand something. 3 brand new accounts that he did. Also, he set up for a pledge loan. Direct deposit, right? Oh, he did do the pledge loan. So he had multiple accounts with Navy Federal. Remember, brand new account, 550 credit score, just opening up, and they gave him a $7,500 credit card with a 550, I think it was like 555 credit score. And they gave him a $7,500 unsecured credit card because of the internal scoring. This is the reason why I continue to tell you guys, this is real. A lot of financial institutions are going to start looking at your internal score to see how long you've been banking with us, what type of accounts you have with us, to determine if they want to give you funding. Okay, so that's the reason I'm telling you about like credit scores, like this Ultrafico score. It's all about the banking. They're gonna start rating you all about the banking. That's the reason Experian Boost is all about the banking. And you're gonna see like Chase even started doing it. With Chase, they have their own system of internal scoring. It's all about banking. So you're gonna see a lot more banks doing that. Okay, so that's very important. Now again, if you have any questions and concerns about business credit, personal credit funding, or if you just want to get access to your FICO score, your real FICO score, because 90% of financial institutions use that score. I know there's a lot of free scoring systems out there, and that's great to give you a glimpse. But when you're actually serious about trying to get funding and stuff, you really need to know what your real scores are and find out which financial institution is actually pulling from there. Okay, so this is Houston with three-way funding.